Going on, we have this panel discussion on commercial and flex spaces, understanding the occupier demands and market dynamics. And leading this talk will be Arpit Mehrotra, Managing Director, Office Services South India and Head of Flex India Colliers. With over 18 plus years of experience, Arpit is responsible for the overall direction, strategy and growth of the firm. I welcome you Arpit on stage, and all of you join me in welcoming him, please. A bigger round of applause just to let us know that lunch was not so heavy. Yeah, and also introducing our speakers in alphabetical order. Let's welcome Amit Goenka, MD and CEO, Nisus Finance, with over 25 years of experience in the industry. Amit is a visionary leader and a professional responsible for over $7 billion of investments globally, with a focus on Middle East and Asia. Let's put our hands together for Amit Goenka, please. Yeah, all together. Let's also join him to welcome Fancy George, CEO, Thomas Workplace Design, with over 3 decades of experience with large-scale multinational corporate office campuses to sustainable projects that follow the philosophy of circular design in retrofit, refurbishment projects. Fancy George has always had a deep appreciation for workplaces from a people perspective. We welcome you. It's amazing to have you over here. And joining them on the panel would be Mahesh, Khaitan, Director, Sattva Group. Mahesh has been at the helm of strategic planning and key implementation of projects since the group's inception. His sharp business acumen and exemplary planning has resulted in over 25 million square feet of world-class sustainable structures and counting forward. I would now request our moderator to kindly take over the proceedings and request all of you to give them a big round of applause as we look forward to this session, please. Thank you.
Firstly, post-lunch sessions are always heavy. Heavy without a black coffee, it's difficult. So, in case you want to carry your black coffees in the room, please do that. But I can tell you one thing for sure. We will make it very interesting. And what we will do here is, while we have a session and we will be talking about what's going to happen, but I think what I've been speaking with the panelists and the speakers here, talking about the experience. I think that's where the story is going to come in, because I think the amount of experience sitting along with me in this panel is huge. Approximately around 100 years experience we are talking about sitting here. We are not so old, but coming back, I think it will be very interactive. But I also have a request, in case if there is some question you want to pick it in between, please do that. Otherwise, what we will do is that last 10 minutes, I will keep it from Q&A perspective and request a lot of questions to come in, because I think the experience needs to come back. That's the thought I have it. Coming back, I think introductions have been done, but I will still say that my name is Arpit. I'm from Colliers and I manage the South India business and the flex business of the country. And I would request the panel, in case if they can have a quick introduction about themselves. Amit?
Good afternoon, Amit Goenka, Managing Director at Nisus Finance, a real estate private equity fund based out of Mumbai.
Good afternoon, I'm Fancy George. I take care of workplace for Thomas Workplace. 30 years of experience, so yeah, hopefully I have a lot to share.
Hello everyone, myself Mahesh Khaitan, and this part of Sattva Group.
I think thank you so much for coming in and having a good introductions about yourself. While the topic has been commercial and the flex spaces, occupier demands and the market dynamics, my first question will come towards you. We have seen the slowdown which came in COVID year. We saw something about a bounce back which was coming in last year. We are seeing, whether from the trends I see till November, I think we will have a much better year from 2022 to 2023. What's your thought, why it's coming back, and what's your thought, what's going to happen in 2024? Both in conventional and flex. Sorry.
Good question. Remember that in 2008 there was a recession?
Yes.
And there was in the original Andhra, when we parted Andhra and Telangana, that can happen in 2012, right?
2012. Yes.
2012. And afterwards, what I've seen the growth of especially in the kind of Hyderabad, I'm saying right now, we can take the example from there. So almost you can see that those days used to be 1.5 million, 2 million square feet of Hyderabad, which touched to 9 million to 10 million square feet. Similarly, this is what you say always when you're going about the same speed, and if you don't have any brake, and then you won't be able to just speed up the car. So similarly, that's a 2019 or 2020, whatever the COVID, whatever it is there, it gave them a good break to us. And I've seen that right now. Last year it was okay. I've seen that 2023, almost we are touching the pre-COVID 2019. Almost I think so this year we in all throughout India, approximately like a 50, 52 million, 55 million might be close. And similarly, like city-wise, all the cities are doing good. That's a good part. So, as I am seeing that, as the demands are concerned, if you have good supply in good location, we know you do good that. And another thing what I am seeing right now, 2023 is almost we have completed now. In the Bangalore, I can say it's always 50 million square feet. Yes. And this year also we close 2019. So it's like a good sign. And there are, I'm seeing that first H1 I can say may not be first quarter. Because generally last quarter as well as beginning of the first quarter nothing moves forward. So I can say H1 will break all the record of ever whatever we had in country. That's what my feeling.
In fact, I will add it here. My experience on that has been, there has always been a cycle. When it comes to both residential and office. Office we see a dip, but office come back, and when it come back, it will be there for 7 years time. Last 3.5 years, I think there has been a slowness in the market. But I think the right opportunities, people have moved on with the right opportunities. And where I see is that I think we are in a mode that whoever will have a good supply at a good location next year. Yeah. We will see a traction. We are already seeing traction. People previously were not even visiting. Then people started visiting. Then they were not making decisions. Now I see people started making decisions. I think that's important. And that's where, Amit, I am trying to come back to you because while we see office market going up, what do you think about, because there has been core assets and people have been talking about from a core asset perspective, what do you think where we see alternative asset moving forward? Also, I know you have been a big follower of investments in flexible market altogether. What's your experience has been, or from a firm perspective, you put an investment in a flex market, in an organization, and then how do you see the entire journey from there also?
That's a lot of questions, but I'll try and take it as it comes. So, we're in Bangalore, and of course, this is the tech city of India, and office space is obviously the core of our living, being, working out of Bangalore. So, I'm assuming everybody here is interested in office spaces in a big way. I think Bangalore has led from the front, whether it's core assets, flex offices, operators, and the paradigm shifts that have happened post-COVID in the commercial working spaces have all largely originated from Bangalore. Therefore, clearly the demand parameters both for occupiers as well as for capital have been very Bangalore-centric. We're seeing a lot of trends now also looking at other cities very favorably, and obviously investors are following that trend very carefully. So when you look at from a global standpoint, I think the CRE story is obviously very, very different from the India CRE story. There has been a contraction of demand, there has been a reduction of rents, and the vacancy levels have continued to persist post-COVID, which is clearly not the case for us in India and a few Asian and emerging economies where we're close to 70% occupancy, if not higher, in most parks. We've seen one of the highest 14-quarter absorptions ending last quarter in September, where we saw gross absorption of 16 million, net absorption of 10 million, which means we're going to cross again 40-odd million square feet of absorption pan-India this year as well. The outlook for the next 10 years for India, as I would say from a global capital allocator, would be close to about 400 million square feet addition over the next 10 years. So that's the outlook, 400 to 500 million square feet will get set up in India come what may. I'm sure Khaitan will take bulk of that, but I'm certain of that. And again, given the sectors that are coming up, with NCR being a very large driver of demand today, as was Bangalore, Hyderabad, Pune, Mumbai. And of course, flex now adding to that heft. We have a growth of 28% in flex spaces over the last 5 years. Annualized growth. Today we are looking at close to 2,500 centers with 6.5 lakh seats, which is likely to go to 10 lakh seats or a million seats over the next 3 years. So you can imagine a 20% plus annualized growth, which means the share of the flex space, which is today 10, 11, 12%, would be significantly larger. And of course, Arpit, you can help us with better numbers. But clearly, I think this whole demand for a environment which is capable of meeting the contemporary needs of working, which is close to one's workplace, home place of stay, place of work, walk to work concepts. I think that is here to stay. People definitely want to go out and they want to work in another location, not necessarily work from home all the time. So I think there is clearly a very dramatic shift in that need, and capital is following very rapidly with that. So to answer your question on alternatives, just the India alternative market today is going to be maybe as large as the mutual fund market in the next 7 years. We're talking about a very large number. Okay, so that is the speed at which today we are already at close to 2 lakh. We are already close to some 2 lakh crore rupees of AIF formation over the last 3 years. So I mean, just the sheer amount of money that is coming in every year, we are looking to be close to some 6 lakh crore rupees of additional AIF over the next 3 years. So just the sheer amount of money that is coming to AIF is obviously finding its way into alternatives. For example, we're looking at co-working very closely. We've invested in the past, and we think that's a very active space. Alternatives are looking at private REITs or private REITs which can effectively enable the creation of these spaces in the flex space, which is not necessarily happening by the big investors in the world. So I think there's a lot of action on the ground to cater to this burgeoning demand from a capital standpoint.
I think too much of stats also.
It's your, I agree with you said rightly, regarding the flex office and all. And you said rightly, that's what we are seeing, 9 to 10% of total area, whatever. As you say, by 2030. Definitely, we have globally, we can say around 25, 26%, always average it is there. So you can see that today we might be having around 750 million total area, whatever we have in India. So by 2030, we'll be touching almost 25% of that. You can understand what level of the flex office growth will be there. So always, I can say that Y to Y, definitely more than 20%, and 20% more than GDP, whatever the percentage any growth is there, you can see that we will go different levels. So definitely your flex office, and whatever you say, that kind of so many billions, won't be on my brain. So yes, definitely we also might have some bite of it.
Thank you.
Good.
Thank you on that. I think it's very insightful, and that's where I think my next question will come down to fancy on it, because while we have heard from a developer perspective, from a finance perspective, I wanted to understand from an occupier perspective, which was pre-pandemic, and the world has changed after post-pandemic, and from a design perspective, environment perspective, sustainable perspective, what do you see a difference?
Yeah, I want to start with this story, right?
Yeah.
So I actually went to pitch in one of these projects, and I went in an Uber, okay? And I reached the park, and I was asked to get out of the Uber and walk about 1 kilometer inside, because Ubers are not allowed inside. And then I just walk all the way in, and I'm wearing like really high heels, higher than this even, right? So that was my experience. So I think bottom line is, like, after the pandemic, we've all realized that we need to be focusing a lot more on what that experiential design is, right? That was like honestly not very pleasant. I went in and we had like a big discussion. So at the end of the day, it's got to be a collaborative effort, not just with the architect alone. It's got to be something that is collaborative with the developer, the financier, the person who's deciding on the budgets, like the architect, and before the space is even picked up. I think the conversation has to happen at that level. Because I believe like a lot of times the occupiers are just given something without a lot of discussion, and they just take it and say, okay, here it is the budget. You know? So now what I'm seeing as a big change is that everybody is almost demanding that we look at neurodiverse kind of workplaces. We look at workplaces that take into account harmonized guidelines, the ESG aspect of it. Sustainability is huge. Everybody has these 2030 goals that they have to meet. What are the materials being used? So there's a lot more like deeper focused effort on making it happen. It wasn't there before. It was like, oh, it's good to have. Good to have. But now it's like a must have. So there's a little bit more of a focus there, and which is really good to see. Things have changed.
I think interesting perspective altogether from a design, but Mahesh, you have been doing a lot of construction and you have been pouring more concrete than anyone which I know about it. All the cities which you have been doing together, right? And I know the amount of quantum of concrete you pour in. So from a design, building construction perspective, because you have been in construction for the longest time. Now last 5 years, and I will not say pre-pandemic and post-pandemic, but I think evolution on construction part, if you can put down some thoughts on that also.
It's a good question for the industry. Definitely there's a lot of change has come in the industry, and the technology completely what we used to do before and today. I can see today more or less all the giants are in the same. I'm just carrying on from the fancy. Sustainability is the most important part. So definitely there's a first part house. We have to see that all the building has to be the green certified building. Either maybe USG is gold, like IG is platinum, and definitely we have to see each and every activity how we have to take up. So that the technology concern today, I can see that today time is money. Correct. So we have to see the technology today steel structure buildings. I can say that today it's not much popular in Bangalore, but in Hyderabad I see that almost 30 to 40% IT buildings are being built as a steel structure building. And another thing what we used to see that 5 years or 7 years before, construction design and quality and all, today's technology quality is totally in a different level. As we said, when we are entering in the premises or when we are entering in an office, it's totally experience totally different. And earlier, today, definitely the accessibility is the most important part. And when we are entering, it's not like earlier we used to see that car and all together. Everything has to be seamless. You have to feel that. So that's today's, we are working together. And next future is technology. And all, I can say not only you only, I would say, but all the developer perspective, all they are started adopting that artificial intelligence and sustainability become like a common. If you don't do that, you won't be able to sustain the market. So that's definitely.
But does it add some cost towards your construction?
It's add something, but it's not like the where we used to say that definitely the marketing point of view I can say yes, we are doing IGBC gold, platinum, USGBC gold, but definitely add the value to the customers, and definitely customers also give the most important, and that definitely if I spend $500 extra on that, definitely outcome will come. So it's not like I'm spending from my pocket. It's a good for the experience for the end user. So nowadays, whatever the building also we are designing, constructing, planning and all, it's earlier we used to do the client, client is looking. Today, not B2B, we are looking at B2C, who is the end user. So keeping in that mind, who is the associate will be coming and working there, he should enjoy when he comes to the premises. So what I'm seeing that right now also, which are the good parts which have been built, there is a lot of today's occupancies are more. Yes. And I'm seeing that work from home, work from office, people won't mind to go to those offices where they feel yes, experience, there is a lot of collaboration area, a lot of F&B's areas are there. So you get a good number of persons there compared to that standalone buildings and all. Exactly. So there's a time now, we have to see that how we can arrange for the sustainability. Single point where we can have a kind of F&B's, retails, all those kind of parts are really good.
So community experience, and fancy, that's my question which is coming up, because what Mahesh has been talking about, whether it is return to office or anything, but if you are making a sustainable, good community of an office, the return to office is much better. So what's your thought, and how do you see from a seamless employee experience, what needs to be done more?
I think it's all about choice, you know. Because, 30 years back, we were given these 6x8 cubicles, 6x6. And then, you know, and everybody was just running, working, and then this 2018, 19, 20, and then that's when everybody just paused, okay, to think about what they wanted. And you don't want to be sitting tied down to a desk anymore, right? So everything, this amenity space that you're talking about, those little gaming areas, outside meeting, all of them should be workable zones. If you can work from a beach, they can work from, you know, the park outside as well. So, you know, that's the way we need to be planning it at the end of the day. And the other thing I feel is like everything you were talking about, you need to also look at the circularity aspect of it. How reusable is anything and everything that we're designing? It's great about the steel structures because those things, you can reuse all those materials. Pretty much everything that we do now has to be thought of what is that end use cycle of what we're designing. It should not go back into the landfill. We need to understand how it goes back into manufacturing. That has to be the question we ask. You know, and we're not asking that.
I think very interesting perspective because I think the thought process has to be long. The thought process cannot be the short because I think as a community, India as a community, whether we talk about office or any community, I think that's where we need to have a vision on this. And I think, Amit, my question is towards you on this itself because now financing cost. The financing cost, the rise of RBI, repo rate, and also from an office perspective also, like there was a time that everything is getting still getting institutional. But we see alternative assets where the strata ownership is coming in. What's your thought? How do you see that?
So cost of construction has definitely gone up, and obviously one of the determining factors is the cost of capital itself, and it's not only limited to India, it's a global phenomenon. Having said that, it hasn't necessarily dented the yields too much. In fact, I think yields continue to be persistent with the rents in some pockets also having gone up over the last 12 to 24 months. I've seen rents in Delhi, Gurgaon go up. I've seen some rents in Bengaluru go up. Rents in Mumbai go up. So I think to that extent, the output has also kept pace with input for grade A assets. And therefore, I think net-net, I don't think the developers or the investors are necessarily worse off. Having said that, clearly there is now a democratization of investments, which is clearly happening in the CRE space with fractionalization, and I think a lot of capital is getting raised through various platforms on the fractional model, which will necessarily look at not the grade A assets, but look at maybe the grade B assets, look at the flex assets, look at something which is slightly smaller and more palatable to the retail investor. But that's a growing tsunami, I think, in favor of the smaller and the flex assets for sure. And I think on the back of that, clearly the SEBI nod for the MSME REIT is clearly a large capital formation in that direction, because the whole intent of MSME REITs is to take smaller assets and make it available to a very large, wide audience of investors. Investors who can put a very small amount of money, maybe a lakh of rupees. And that allows them to obviously start earning yields from these spaces and contribute a very large amount of capital. So I think this whole democratization of investments and assets is very rapidly forming shape. We're seeing a lot of platforms very active in Bangalore for even underdevelopment buildings. So they're not necessarily doing it only for ready assets, but there's a lot of capital also getting created for under construction developments and fractional ownership of that, where there is a lot of confidence in the absorption and the yields that will emanate from them. So I think that is obviously lowering the cost to some extent, where the outlook is obviously very bright and people have a very significant view on the outlook. I think that's one part. Having said that, I think there's enough equity also pouring in for RE. I think there are a lot of platforms which are already existing in conjunction with large developers who continue to pour in a lot of equity money to be able to develop grade A assets, which is why we're building almost 60 million square feet of assets a year. And all that money is obviously not debt fueled. It's a combination of private equity, developer capital, or land and some debt. So clearly, I think there is enough and more coming our way, clearly because of the demand drivers, which are very clearly seen. And I think one of the biggest demand drivers I'm seeing is this whole creation of GCCs in India. I was just reading yesterday that there are 5,000 Indian CEOs who manage GCCs. And by 2030, the number of Indian CEOs will rise to 30,000. Now, if you have 30,000 Indian CEOs, which means additional 25,000 GCCs getting created in India with Indian CEOs. you can imagine the entire amount of footprint that will be required to accommodate these sectors. So I think that itself is a very clear indication of where the world wants its people and its technology and its processes to operate from a continuity standpoint. And it's clearly not in the West. And within the Eastern markets, India has clearly continued to find a lot of favor, not just because of the spaces, but also because of the talent. So I think there's a lot of money coming just from those corporate occupiers themselves to do build to suit. So you don't necessarily need to do this market demand based.
I think very valid point, especially from a GCC perspective, because the amount of return to office, India will be the second highest after China. The return to office, while the US, Europe return to office has been the lowest. The cost, which you said, classic example from someone who is there from a West Coast, right? 10 years back, the dollar price was 45 rupees, $1, right? Today is 80, 85, right? Still a $1 cost. So from someone who has pumped down the money, it's still a dollar market. It's not a $2 and $3 market, and that's where I think the opportunities are high. Quality of talent, because India was seen always like a low quality talent market, which is not there anymore. Because it's a high quality market.
Talent cost has gone up.
Yes.
And that might be a challenge for India. So we definitely might be a challenge for that.
अभी भी बहुत कम है सर. It's still lesser as compared to more
So where the real estate are concerned, definitely we always work under $1.
Yeah.
And still we are there, same like these are the major cities are there.
Yes.
Might be Mumbai, might be that's a hardly small market,
Yes.
so we don't have much impact on that.
Correct. So I think from a cost arbitrage perspective, Mahesh, because the cost of your capital going up and rentals are still at $1. From a landlord perspective, how do you see that?
Yeah, definitely there's a pressure on the developer's prospect point of view, and the margins are very thin, and you can see that there are a lot of developers are now just going on that route. And you see that we are expecting maybe next quarter kind of rate of interest will come down. But yesterday RBI said maybe it may not be 2 quarters, so that might be changed. But as Amit said, there are a lot of private equity and all they are supporting, and definitely without partnership, because it's a huge investment what required. And without having the partnership, we won't be able to. The speeds and all which are right now is leads, and maybe 3-4 leads are in pipeline right now. We don't know what's the kind of future, but right now 3-4 leads are in pipeline. I can say that today maybe next 4 quarters, around 75% to 80% area will be green. If I'm right?
Correct.
So definitely this will be investor driven, and REIT is like where small investor also can invest. So definitely everybody will have the fight.
I think very interesting again a point now. Maybe I'll come back towards the flex market now, because I think from this industry mushroom when the uncertainty came in, right? And like you and everyone said, this industry is going to boom till the time there will be uncertainty. Previously, business plan and Occupier used to plan for 5 years, 10 years, 15 years, which is not anymore because there is still uncertainty. Now, from a landlord perspective, again, you thought that because you used to amortize your capex over a lock-in period, right? But there is someone else who has come in and say valuation is important, amortization does not matter. What happens? Maybe that's where the game is. So your thought on that also from a developer perspective, because now we see you were always building asset, which is building. Plus you were always doing sometimes the capex part of it. You were only not doing the OPEX side. You are losing out to someone. How do you see that? You see many landlords in the country who say that we will come back, but to let go that margin, we will do it on our own.
Yeah, I agree. See, it's Amit said that a lot of GCCs are just getting in India. Everybody are just also want to see that trial run actually. Yeah. So definitely the Blackstone is the best solution for them. And I'm seeing right now that last 2 quarters, almost I see that one of the sector which is doing really good in coming up actually. Those are mostly they are going through the all GCC like pharma sectors. Pharma sectors, and I can say today, I don't know about that, but we are almost today this year almost 50% relationship grown with the pharma sectors. Another sector what I am seeing right now is the BFSI companies. BFSI companies also they're doing. And another thing, apart from office and BFSI companies are percentage going to be much higher. I have seen that some of our companies almost 100% they are in the work from office. So they are also getting a lot of kind of demand for the commercial spaces, and most of new companies who are just like to be settled in India, they want to go 2-3 years for the trial run in India. So they need all flexibility in the sense of they want to start with 1,000 seats, they need for another 6 months to add in for 500,000 seats. They definitely, the flex office is only the choice those they can support them. Because being a developer, I can't keep holding the space for the long and all. So but flex office is there, they can accommodate them, and wherever their future growth is there. So that's a best solution for flex office, only solution for them. So we see that we make a different level of the growth for flex office.
So, Fancy, now question is coming about from I'm just thinking about it, and the thought is coming about employee well-being. Because there's a lot of people have talked about employee well-being and saying one of the reasons the return to office has to be thoughtful from an employee well-being perspective, that what we can do more to bring back employee. So if you can just put down some thought on employee well-being, and from a design perspective, how do you see it's moving forward?
So, there is this terminology that we hear a lot. I don't know if you heard, neurodiverse workplaces, right? So neurodiverse, what is neurodiversity in the workplace? And every time I've thrown this at a lot of my clients, and they're like, okay, that's not my topic. Yeah, it is your topic. So what happens is, like, I think this is something that's like totally ignored a lot. The fact that, it's not about the age group of 20 to 50 to 60 anymore. It's like you can be a 20-year-old, you can be hypersensitive, neurodiverse. It happens flat across the age groups. So how do we cater to people who are that kind of, different kind of neurodiversity? That comes with choice. So you take care of that part of it. Then there are things like, people with who are differently abled. So inclusive workplaces. This is another terminology that we hear a lot about. And nowadays we have inclusive workplace, inclusive consultants that we need to hire on board because we don't know enough. And there are many there. There are many there who can advise, and you can talk to them about this, but how do we take care of that kind of, it's not, I was corrected. I was actually doing this panel just about a month back, and then I was saying disabled people. It's not the people, it's not disabled people, it's people with different abilities. We need to get the terminology right. There are people, we're all humans. How do we take care of people with different abilities? That's what we need to understand. And there are, and then another person just came up to me and said, just thank you so much for bringing this up. I have a son. He's like considered disabled. So it just feels good to know that he's normal like everybody else. And how do we take care of design in the workplace that takes care of all of these differently abled people? That terminology we need to understand. And then there are things like, this is another thing that we don't even understand. It's like temporary disability. You can fall, break a leg, and all of a sudden you realize it's so difficult to walk up the steps, and there's no ramp provided. There are so many things, and that's when you start thinking. So I think these things have to be brought up front as a must-have, because I'm asked this question all the time. Is it a must-have, or is it a good to have? Is there is there something that we need to take care of? Is it a government mandate? Is it a mandate? No, I think as providers, this has to be the baseline for us.
Surprisingly also, it's definitely that design brings a lot of value to this environment. That some of companies when I've seen today's what is day, but today's peer day. It's like that also is attracting to the people who come from work from office. So it's it's a trial run. So some of companies are inviting their family, some of companies they are inviting today we have special days, something like we are arranging some kind of events in the office and music like dance programs and all. So it's there all the way, design is one part, other side, today we'll have we call this kind of gala dinners, So that's a overview percent. So some of cases I see the 100% presence when they invited beer day. Yeah. It's like so that is another question.
That's like trust in the workplace. And taking care of your well-being, belonging in the workplace. I mean, You can
I think
go on.
again we are coming back from my thoughts that this is a community living. People were talking about community living only in the residential market. I think there is a community living coming up in the office market also. And the more the amount of amenities, the more the better the employees are feeling to return back to office. That's my thought on that. Before we go back towards the question to everyone here, maybe the last comments, Mahesh ji, what do you see in 2024? What will change in 2024?
2024, I can see that definitely is supposed to the 2023. I see that right now, definitely last quarter of that basically, I can say period of 15th November to first up to January and all, nothing moves up. But I see the overall H1 next first 2 quarters of that is definitely the big market for it. I'm seeing right now that few RFPs are in place right now. The whatever available space in Bengaluru, the ready space in Bengaluru, I think so. That's kind of demand, sir. I see that two kind of e-commerce market, which is the top leading companies are there right now. They all are talking the millions square feet, millions plus millions plus millions. So their plannings are right now that I see that next years of time there will be 3 million square feet. It means like 3 million means 30,000 they are hiring in the region like one city. That's not only that, only in Bangalore, other city also the same, the way that they're looking at space. So definitely H1 will be the big market for 2024.
Thank you. Fancy your
And one thing I would like to add here also, it's like it's not only that the commercial space. When every 100 square feet, generally we averagely consider 100 square feet, one seat and all. That equivalent 10 square feet, 1 square feet equivalent to 10 square feet, my residential growth is also less than this. So that also adds the value to the real estate. So it's we are in both the sectors, commercial as well as residential.
Correct.
So both the sectors, of course, logistics and all, those are doing good. Likes of is doing good. Other verticals are getting open like a kind of co-living. Colliers also today, because most of the like a utilities who are setting up the new city, they are also wants to like a, today in our language we call like EV, a small way. But it's that also is coming very organized way now. So that also will be good demand in market.
Fancy your thoughts on that from your thoughts. How do you see what needs to be done more in 2024?
So other than the choice and all of those things that we just spoke about, neurodivers, inclusive, I think the bigger thing also, you have to look at the younger generation now. There's a big focus on recycling, and there's a big focus on sustainability. There are a lot of students, and just recently we had this event where we called an architect. He goes into the dump yards to pick up like dump material, garbage, and he builds out of garbage. I think that's going to be a big deal going forward. Other than everything else I'm talking about, I'm saying, it's like zero to landfill, and how sustainable in thought and how circular can you be as anyone, everybody.
I think interesting because I think circular is the right word because the world will be moving towards that direction itself.
It's already moving in that direction.
Amit, while we have seen around $2.9 billion investment in commercial real estate till September this year, I'm sure while we have another 15 days to close for this year. But what's your thought? What will be the commercial market investment you see coming in 2024?
Honestly, I think there are certain headwinds in terms of new capital. While we talked about demand, we talked about the positive outlook for CRE and Flex. But from a global standpoint, there are certain headwinds. First of all, because of the challenges that global investors are facing with their home portfolios, especially in Europe and the US. They're seeing large occupancy, they're seeing a net overhang on their portfolios. Their serviceability of their own leverage is becoming a problem. And in that scenario, in a falling life market, to allocate new capital to a new economy becomes slightly more challenging because the home issues are far many. So, talking to a Middle Eastern sovereign fund, and they have got large exposure to their own home country as well as to US markets, and they are also in a salvage mode. So, our first intent is to actually recover our invested capital before we employ new money. So, I think that is a little bit of a challenge because especially in a high interest rate environment, the expectation of yields is also going up, as is the cost of capital. So, clearly there is now an emerging negative spread between the yields being generated and the cost of capital that has to be forked out for it. Which is not a great situation for a fund manager. So from that perspective, especially the Western economy, I think that continues to be a challenge. Plus, there are certain geopolitical issues also with certain nations where large capital was coming, where there's been a pause. Unless we sort out that political or geopolitical issue, that will continue to be in a pause. As far as Asian money is concerned, again, I think there are a lot of emerging opportunities in Taiwan, in the Philippines, in Malaysia, and several other emerging markets of Asia, which are also showing reasonable promise for the money available in Asia. Having said that, because I think now APAC is ex-China, or India is looking at China +1 or China +2. So I think there is certainly a propensity to allocate some capital within the APAC region for Indian real estate. But it's going to be slightly more cautious and wait for the 24 political outcome. It will wait for some reversal of the interest rate regime and wait for some more stability and predictability. We just saw a change in the SEZ policy. So in a changing policy and regulatory environment, it makes investors slightly more nervous. Should I allocate capital now, or should I wait for the next regime to come, play its cards out, and then let me put my capital to work?
Amit, one interesting thing you picked about was the SEZ policy, and I think very interesting point. Before I wanted to go back to the audience, Mahesh, I wanted to have your inputs on that because it's still some time while the notification has come in, but it's still confusing. And what's going to happen?
I think the final circular more or less has come, it has to be notified, and I can say it at a lot of basically whatever the vacancy what we had actually and in the SEZ area. It will definitely help to each and everyone for the developer perspective and to create the vacancy. You might have seen some of it has gone almost 10% up last 7 days. So that's an indication basically they had a huge area of SEZ and those areas getting clear. So that's the indications are there. So definitely it helps. When help developer, it will help back to the banks also.
Yes, I think market dynamics. This will be very important thing which we will have to see much more closely from 2024 perspective. I now would like to open this.
But just for the audience here, I would say that this business is now not limited to the big few. I think let me be very clear about that. In the last 12 months, the number of proposals for financing that have come to us for small developments have been many and very interesting. The SME absorption of small space to own, to occupy has gone up dramatically. The footprint required by large corporates has shrunk in one location, which means today they are not necessarily required to be in a million square feet box. They can be in a 300,000 square feet box or a 400,000 square feet box and taking 30, 40, 50% of that as well. So I think there again is a very wide opening opportunity both from a consumption standpoint as well as from a capital standpoint. It's very easy for me to say, okay, why don't I put 100 crore rupees? Why don't we go and develop this 1 lakh square feet or 2 lakh square feet box? And why don't you offer it to the SMEs in that micro market? Because there's no quality grading asset supply which has come up in the last several decades in many cities, especially in the core market areas. So I think that's a very large emerging opportunity where I'm seeing a lot more people getting in and actually tackling that very aggressively, which is clearly an opportunity for us. And likewise, you're seeing the emergence of the new operators on the flex and the co-working side, which again is now fueled by new money. Now that's again a very large opportunity for a very large number of people there.
600 operators, my last count was pan-India. Trust me, it's only increasing from a day-to-day perspective.
One more thing here, basically most of who are working only for valuation gain, I think that might be a challenge. But as a business perspective point of view, you have to see from every bite we have to get something. So basically who are looking only just for valuation gain, they might have some challenges.
Correct.
And we should run as a business.
Correct.
And as long as we are running our business, we no need to do that.
I think Amit is not going to fund anyone who is on negative EBITDA. Trust me.
Amit is, okay, he has a lot of surplus spending. So somewhere you have to come in. And like we, so many developers are there. And who doesn't go to that? We all, every day when we get up in the morning, we just always bring that.
Thank you, Mahesh. On this, I am opening this forum now for the questions. In case anyone has question, we have the right man. Yes, ma'am. Someone with the mic.
Hi, Fancy, and good afternoon, gentlemen. Sustainability, right, in construction, and my question is, what do you look at, and how do you kind of start using sustainable materials in construction? Because there are a lot of players now, a lot of startups who've got some amazing materials, and I'm one of them too. So, so what does it take for you guys to, sorry about using terms like this, but you all to start accepting such material? Because in India, we have this mindset that concrete is the best. Whereas, in the US, they construct with just, drywall, yeah. So where you can literally punch a hole, in the wall.
So assuming the question is for
yes, I guess it's more for him. So what does it take for developers like you to do this? Because we have materials which are, which reduce embodied carbon, which reduce operational carbon, where the end of life, waste doesn't go into landfills, stuff like that. So I'm Sangeeta Menon, and I manufacture composite panels for construction. So I would like some feedback,
Good. And sustainability not only does basically to getting the construction, it has to start from the design point of view. That's how you are designing your product. So start with the designing, and I'll say that right now today, whatever the green building and all what we are planning right now, so everything, every wall has to be designed in such a way where I can save some of my cost. So that's a kind of start with the designing. So as the product is concerned today, whatever if I'm going to build any kind of say example, I use grading certificate building. So where the product what I'm preparing has to be in within some areas, and what maximum local product what I can use it. That's a start with that. And definitely when EHS comes, successfully both together comes. Say example, today we used to have an AHU around today. Today my quality of AHU, has gone to different level. I'm just started looking at. It's alright. It's a good, interesting topic, which is my favorite also. So it's definitely we have to start design, construction materials, and how we are being executed. So that's everything has to be worked together. And as we are discussing, it's a sustainability means like once you get in the park, you should take your brake packet while going back from there only. You should not stop your car back. So it's like a combo where we are just going there, where all the amenities, facilities are available. And of course, that the product has to be today's kind of A-grade product. So don't expect anything like suppose I used to building before, like concrete building and covered in the wall and covered with the glass. Today, whatever quality of the glass, whatever you're using it today, it won't work. I'm just giving most of people are like, I think CRE people are here right now. Earlier we used to talk power consumption. Am I right? Earlier 1 kVA for every 100 square feet, 1.2 kVA. Today we are working less than 0.35 kVA for every 100 square feet. So you can understand 1/3 power has come down. So why? Because we are whatever the product what we are using it, even the inside, even the whatever my client for light point of view, say like a system point of view, whatever even the design point of view, also all products are being designed in such a way that the power requirement has come down. AHU is being designed in such a way that say like MERV 13, there was no smart AHU before. Today also I can say 85-90% buildings being built with a smart AHU. And after the thanks to COVID also whatever happened, so that also teaches a lot of lesson to us. So the quality of air, we can provide even a better quality than whatever we are using anywhere in the hill station also. But we are restricting ourselves. Once we come out from office, tomorrow you should not get infection outside. So that we are just extent of that what we are maintaining today.
Thank you, Sangeeta. Any other question? Anyone has it, please? Yes. Yes, sir.
This question is to Arpit.
Oh, good question.
All of you to answer.
Yes, sir.
See, earlier the occupiers used to sign leases for a long duration because everyone used to think the life of an office which we are going to set up should be at least 10 years. Post-pandemic, do you think the occupier mindset have changed in terms of life as an office, is it reduced or is it remains same? What's the mindset?
So the mindset definitely has come because it has come down because of the uncertainty. Till the time there is uncertainty, previously like you rightly said, people used to plan their offices for 10-15 years. So that's where the leases of 5 plus 5 plus 5 or 5 plus 5. Now today post-pandemic, while the leases are still at 5 plus 5, but when the business plan is being done these days, business plan is not being planned for 10 years. Now we see probably thought processes for 3 years. That's where we see that the entire thought process from a business investment and how low we can keep our investment. Design wise, definitely there is always a thought in the push which comes in from an occupier that we need to give more and more, but from a business and the finance perspective, how we can reduce the cost because we don't know where the world is going ahead.
Okay, since fancy is a propeller of sustainability everywhere, I have a recommendation. Going forward, every day I see LinkedIn, I see all my photos of new offices done. But the outcome, what I am correlating is that each offices is done on a competitive basis and a much better offices, but they are consuming a lot of material. They are becoming more and more consumer oriented, even though life of office has reduced. Hence, my recommendation through Fancy to initiate an award for an office which consumes least amount of material to set up. I mean, that need to be
Great
done.
point. Yeah, Pradesh, we've had this conversation before. We are always constantly going and building new. How about going and looking at what's existing, retrofitting it? That's a circular design, and that's what we were talking about. And we've had this conversation. There's not enough push for this, and I think there should be. And you're right, absolutely.
I think very valid point, Duration. I see that's where possibly 2024 will be, then 2023, because the thought, at least now people are talking about it. Previously people are not even talking about it. It was in a closed room talks. That's where it was happening.
Previously it used to be, I can't do it. Now it's like, oh, we probably can do it. Now we should do it.
Any further question, please?
Yeah, in the interest of time, please, I have to just request, and I'm sure you can always connect one-on-one. Not the point which you mentioned about the specially abled, right? And from the fact that we can't to the belief that we can, and surely we reach a point where we'll definitely be able to do it. Let's put our hands together for all of them, please. They have kept us awake, alive, and period post-lunch, and so should all of you with your applause. And to say a big thank you to them, may I request Dr. Architect Pony Kansasao and Architect Oscar Kansasao, the founders of Oscar and Pony Architects, to kindly come forward to felicitate them and say a big thank you on behalf of all of us. Yes, sir, ma'am, if you could please come forward and all of you put your hands together. Give them a roaring, continuous round of applause as they come down here to say a big thank you to our eminent panel, please. Yeah.
And I'd like to thanks to Realty Plus also to whatever they just called us for such a wonderful program. Thank you, Realty Plus.
Realty Plus would have been incomplete without your kind presence. So thank you for joining us today. Yeah, thank you. Let's give it up to the gentleman, please. Very kind, very thoughtful, very endearing. Oh, he's the main sponsor as well. Absolutely, this wasn't biased at all. Trust me, this is unbiased. Thank you. Next time I will be a little careful. Thank you for being so kind. Yeah. Now literally I mean it would have been incomplete, impossible without you. Thank you. Can we all give them a big round of applause, please, and thank them for their presence. Thank you.